Welcome to Markets Now. I'm Michelle. I work with Mike Miner, professional ag marketing, and we're seeing pretty much everything lower this morning with the exception of the cattle market. And Mike, we had a nice recovery yesterday in the grains. Not much follow through here today, unfortunately, is there?
No, and from a technical perspective, we were looking at a potential key reversal yesterday on the corn market, for example, and that
Right.
that was hopefully going to give the bulls a little bit of an edge today. It doesn't look like they're taking advantage of it so far because we are needing a close higher today to confirm that, and not the best start, is it, Michelle?
No, it's not. And besides being oversold, there's really not a lot of positive fundamental news right now in this market, is there?
No, not at all. I mean, we can dive down the list. It's pretty easy to go down the list on soybeans if you wanted to start there, Michelle.
Yeah, let's start off talking first of all about the CONAB numbers that came out this morning and maybe a little disappointment in terms of where they came in terms of their estimate for Brazil.
Yeah, 155 on production for Brazil out of CONAB. Pretty close, actually, to what the USDA is expecting, or what we're expecting the trade is out of the USDA on Friday. So that could have been probably low 150s to get towards a lot of the other private analysts. And really, if you're talking anything above 150 at all out of Brazil for million metric ton production, then you start to look at, well, their previous record was 2021 at 185 million metric ton or so between Argentina and Brazil. And if you've got a 151 million metric ton, let's say out of Brazil still, and you end up with a 50 million metric ton production out of Argentina, I mean, you're still at a record of
Oh,
over
yeah.
15 over the prior record. So, from a production standpoint, they're obviously not hurting yet at this current time frame. And when we talk about competitiveness now, the drier weather has led to some soybeans becoming available out of Brazil earlier than normal, and some of those yields have been reported at normal, somehow even being sped up. So they've hit the ports at Brazil earlier than normal, and now their export premiums or their prices for premium have dropped pretty significantly, making them incredibly competitive for exports globally already, Michelle.
No doubt. And the rain makes grain mentality kind of hit here. So we've kind of removed a lot of weather premium here out of the soybean market. So, what do you think as far as where do we need to hold from a technical standpoint, not to drop down substantially?
Well, unless the WASDE report on Friday gives us some good news, I mean, we're going to need to test that 1210 area, probably out of the soybean market. So that would be a pretty good test area. And I think, you've still got like 70 cents down until that next low back from May in these soybean futures. So we've got a little bit of chart to play with, I'm afraid, on the soybean market for sure.
Yeah, and you mentioned the USDA report, average trade guesses don't look like much change. And as far as South American numbers, as you point out, USDA probably isn't going to change a whole lot there either, are they?
So that's the real key. Everybody continues to talk about the USDA's expectations and what numbers they'll pull out for Brazil and Argentina. However, I think looking back in history, the January report is a great pivot report, and they're not expecting many changes out of either yield or acre changes out of the United States at all for corn or soybeans. So I really think that you'll probably get one shocking number out of the USDA report for the US balance sheet for yield or acres, some change in those numbers that'll maybe grab the trade's attention a little bit. Now it's impossible to know whether it's going to be friendly or not, right? But I would watch the US balance sheet and just maybe we'll get some volatility from one of those numbers because at this point it's pretty hard to gauge what direction they're going to be headed in, Michelle.
Yeah, so if you look at the report, which of the commodities would it be most likely we could get that surprise in?
I mean, corn most likely because we've got a really burdensome balance sheet. There's a lot of excess there. You could move one of those pretty significantly. The soybean market, it's going to be a little difficult because you do have tighter ending stocks there. If you do make a change, you get into a tight situation a little bit quicker. So if you do get one on the soybean balance sheet, that would probably be a bigger reaction out of our trade. But the corn one, I think, could take a number and absorb it a little bit easier if you do get one. So I would expect a change majorly out of the corn balance sheet, anyways, for the United States if you're going to get one.
Now, the pullback in the grains, the other surprising part, Mike, has been the fact that, we haven't stimulated any demand. We haven't seen any flash sales for a while. And that kind of also is holding that market down, isn't it?
Yeah, so you've got probably three different things. One is that the main factor for soybeans is that China crush margins are deeply negative now, so their demand for soybeans has dropped. And to back that up now, you've got Brazil soybeans coming a little bit earlier than normal, earlier than they expected, and now that's going to lead to them being more competitive than we are for global exports. And going forward, the third main point there would be more on the corn and wheat side of exports. You are seeing Ukraine and Russia quite active actually on exports recently to Egypt and some of these other locations, as they're pretty aggressive for the grain markets on their exports. And the U.S., we've exported some wheat to Mexico here really recently, but the corn and wheat numbers really haven't been that bad on our exports. But like soybeans, our weekly shipment number last week was the worst we've had seasonally in the last 10 years. So out of the soybean market, those, I mean, topple that on with all the other things we talked about already, Michelle. That's probably why we've seen such a slide here the last month in soybean futures.
Yeah. And I think all of the shipping issues that we have kind of have, come into that to make it even worse. The Mississippi
Mhm.
River being down, you've got problems in the Panama Canal, the Red Sea. It all kind of feeds together, doesn't it?
Yeah, it does.
What about this cattle market? A little bit higher today. Do you think we're putting weather premium in? And do we need to put weather premium in?
It's a little tough, so the front end futures are probably going to lead this thing higher, and they kind of have been a little bit here with winter weather starting to take a toll on performance. And you've got cold temps coming this weekend and then next week as well. So you're probably seeing a peak right now in weights, which is thank goodness, because performance has been fantastic up until this point. But those weights seasonally really need to start dropping fast to catch up to a more normal type number. So that'll be nice to see peak finally for this time of the year. And weather, I think, rather than just performance wise, we saw some impact on slaughter here yesterday. You were
Right.
talking mainly in the Kansas area. You had Cargill, Tyson, they slowed down, didn't kill, had to halt their production there. So weather impacted some slaughter yesterday. And I mean, with that being the case on cattle, cash sales have been incredibly slow this week because of the bad weather.
Yeah, we'll see where that comes out. You mentioned slaughter 104,000 revision on Monday, 94,000 yesterday. So hopefully we can get ramped up this week, or today. But do you think that the feedlots, are they going to hold out for higher money on cash? I know you said cash has been slow, but
Yeah, at this point, I think they're still hoping for a little bit more premium yet. A lot of talk about the 50% retracement area too on the charts. If we can get a little bit more of a rebound, another $5, I mean, I think that would spur a lot of selling. That finally gets a lot of people back above break even levels. So I think they'd like some areas back around that 50% to really let some go. But at the same time, when once weather starts turning like this, that's not very much fun either, Michelle.
no, it isn't. So the hog market back down today after 4 up days. I thought maybe we were trying to carve out a seasonal low. What's your thought about that?
I mean, yeah, we put on over $6.50 over 4 trading sessions on that Feb contract, which kind of led the way. And I mean, your talking points are pretty similar to cattle when you start talking about, slaughter being down significantly due to the bad weather. And Packers will probably have to get more aggressive this week to make up for the lost production. However, I was hoping for a little bit better of a cash rebound. I mean, we were only up like 50 cents yesterday, a bit of a letdown after a major snowstorm, I think, here, Michelle.
Yeah. And, are you worried about us backing up hogs now?
I mean, there's talk about holding diets and things like that, but
Mhm.
I think it's more down to the system rather than industry wide. So I'm not too worried about it at this point. It's been more of a choice, I think, at this point.
All right. Thanks for joining us, Mike Miner with Professional Ag Marketing. That is Markets Now.